Hello and welcome to NDTV Profit. You're watching IPO-bound and the company in focus this week is Niva Bupa Health Insurance. It's one of the few standalone health insurance companies in the country. To be precise, the fourth largest health insurance company. Its IPO is opening on number 7th, closes on number 11th. Price between 70 to 74 rupees. It has a fresh issue of 800 crores and OFS of 1400 crores. So a total IPO size of 2200 crores, and the company is valued at little over 13,500 crores at the upper end of the price band. And joining me today is Krishnan Ramachandran, who is the MD and CEO of the company, and Vishwanath Mahindra, who is the CFO of the company. Gentlemen, thank you very much for joining us on NDTV Profit. Mr. Ramachandran, my first question is about the fundraise that you're making, 800 crores. What are you going to use that for?
So firstly, Sajid, thank you very much for the opportunity to be on your show. Very exciting time for the company and absolutely grateful for having us on your show. In terms of the objective of raising this 800 crores primary, Sajid, our purpose as Niva Bupa is to give every Indian the confidence to access the best healthcare. So we're very excited about investing, in the growth opportunity of health insurance in India. And this 800 crore, is to support our growth plans over the years and to meet our solvency requirements. That is the main reason that we're raising this money during this issue.
Your solvency is already around 2.4, if I'm not wrong, at the end of June. How much will the solvency go up by? And when you say that it's for the growth requirements for the next couple of years, how many years are we talking about?
So yes, our solvency will go up, and to some extent we will be overcapitalized because of this primary raise. But the idea is to take care of future growth requirements, and we believe that as we execute well, we will continue to be able to grow and also become self-sustaining as a company with this capital increase, Sajid.
My understanding is that Bupa and your other promoter, Fettletone, is offloading shares as part of the OFS. Fettletone becomes an investor and it gets declassified as a promoter post this allotment. And how much stake will be Bupa holding after this fundraise?
So Bupa, as you know, Sajid, is a long-term shareholder. They are more than 80 years old as a company, and their only reason for existence, so to speak, is for the customer. That's their corporate structure. The only reason Bupa has an offer for sale in this issue is to accommodate FII headroom. As you know, FDI cap is 74% in India, and to accommodate the considerable interest that we're seeing with FIIs, Bupa has agreed to an offer for sale through the issue. But that's the only reason that they are bringing down their shareholding. True North, as you know, is private equity. They have completed 5 years of their investment here, and there is the remainder of the offer for sale is coming from True North.
What will be the FI headroom, if I may ask, as part of the entire process?
So Bupa will, after this, OFS will be at 56%. So 74% is the FDI limit. So that's the kind of headroom we have.
And True North will not bring in any FI limit, right? Because it's a AIF based out of India in that sense. I understand that Fettletone has sold 10% stake to Axis Bank. So how much Axis Bank would be getting as part of the proceeds?
So Axis is not a direct shareholder in the company, Sajid. They are only through Fettletone. So whatever is the dilution that will be there for Fettletone, in proportion of that, Axis will get diluted.
And what will be the Fettletone stake after this?
That will be in high teens.
Okay. And they will be holding the entire thing through an SPV for some time.
That's correct.
Give me a sense of the kind of business growth that we are seeing, because in Q1 we saw net loss, and I understand that is because of some of the seasonal factors that came in. But how is the business growing in? Because we've seen that Q2 from some of the industry players that are there, has been a very tough quarter and very highly competitive quarter for many of them.
So, as far as business growth is concerned, as of August, and this is publicly available information, Sajid, our growth rate is about 30, a shade over 30%. So we continue to grow well over market growth rates. Our Q1 financial results are out, and if you look at our Q1 numbers year-on-year basis, we continue to grow at 30% plus, and there's also been, a significant improvement in our overall operating metrics, and this is publicly available.
Has there been enough significant pricing pressure in of late in the last quarter or two?
I wouldn't say pricing pressure. I think many operators in the industry, and Niva Bupa included, have moved to a rhythm of annual price revision to factor for medical inflation, which is an annual phenomenon, just like general inflation, whether it's wages, bills. So factoring for that, we have moved to a rhythm of, especially on mature products, passing on largely single-digit premium increases across our mature products.
And it's for existing and newer products, or it's a combination of both?
It is both. So when we increase rates on a product, it's applicable, to both new customers as well as existing customers.
And those who are coming up for renewal every year.
That's correct. Both.
Give me also a sense of your expenses, because your expenses of management have exceeded the statutory limits, and you have sought an exemption from IRDA for that. When do you expect to bring that back to those limits?
Broadly, all companies, including ourselves, we have given a glide path for compliance with the limit, which is 35% plus allowances by FY26. Given all the initiatives we have put in as a company, and given economies of scale and operating leverage, we do fully intend to comply by FY26 as required by regulator. And I'll also give you a sense of what are some of the things that, or what are some of the levers that will help us with that. One is, of course, economies of scale. And by that, I mean, as a company, we have invested significantly in a range of digital and analytics initiatives. So if you look at the value chain of the company, Sajid, you'll see that, and this is something that we have disclosed in our red herring prospectus, close to 50% of our customers are underwritten without human touch, which means we have an underwriting rule engine that allows us to offer risk decisions, entirely automatically. A large proportion of our policies are serviced using technology, whether it's a web form, whether it's a chatbot, whether it's through our customer app. More than 25% of our cashless claims are adjudicated using technology again. This is something that we have disclosed, and this is something that we use AI and ML for. So this is great customer experience, but also helps flatten the cost curve. Close to 85% of our renewals are done digitally. So all of this will mean that our fixed costs will flatten out even as our business grows. So this is one important lever for us to comply. The second one is operating leverage. We are focused on retail. As we become bigger as a company, the proportion of our retail book will grow. And the operational expense, because of all of the automation I mentioned on that retail book, is relatively small. So taken together, we have comfort, and we do intend to comply fully with the IRDA requirement of 35% plus allowances by FY26.
Do you think you'll be able to grow at the CAGR of 41%, which you've been growing between 22 to 24? Is it going to taper down a bit?
See, our objective will be to continue to outpace industry growth.
But industry is growing at a very lower rate as compared to yours.
Historically, yes. But there is a base effect that will come into play. Industry at scale is expected to continue to grow at 17-18%. A lot of the regulatory initiatives, are to develop and grow the industry. So, 17-18% growth at scale is a very impressive growth rate, is our belief. And as Niva Bupa, the 800 crore capital raise that you mentioned upfront, Sajid, We do intend to invest in continuing to build new and innovative products, in expanding our distribution, in investing on technology, as well as in talent, so that we can sustain above industry growth rates.
Mr. Mahindra, give me a sense of your profitability curve, because while Q1 has been a loss making, when on a whole year last year, again you were profitable, but Q1 again of last fiscal FY24 you were again loss making. So can you give us a sense of the seasonality that plays out in the health insurance business, and when does the actual profitability kick in actually?
Sure. So without getting into specific numbers, I can tell you, yes, seasonality is there. It is more accounting seasonality related to recognition of earned premium, depending on the method we follow. So in our case, we follow 1/2 method, 50% UPI method. What that means is in Q1, we have a loss ratio is high, earning is on lower side. And that's why we historically Q1 and Q2 are loss making. So, and Q4, because of the seasonality of business coupled with the earning method, so that compensate for the losses in Q1, Q2. So that's been the trajectory in the past, and that's something which continues.
When do you see consistent profitability coming in despite seasonality into your business?
Now, on an annual basis, if you look at it, we've been profitable FY23 onwards. So we've been in the black. So I think really the right way to look at our financials, Sajid, is if in terms of results, I would request you to look at our financials on an IFRS basis. That is a lot smoother. There you will see that there's a smoother trajectory of profit. But if you're looking at it on an Indian GAAP basis, last 2 years we've been profitable. As Vishwanath said, there's a certain seasonality. On a full year basis, the objective will be to continue the track record of profitability that we have established.
I also wanted to get an idea of your combined ratio. It's around 99.15. What kind of levers do you have to bring it down further?
So in terms of combined ratio, majorly the improvement will come from reduction in expense, which Mr. Krishan talked about. All the things around operating leverage, economies of scale. So that's something which is giving us, improvement in combined ratio in the past 2 years, and the same thing will continue.
And what would be that, in terms of a rough estimate, what is the kind of decline that you can see in there in terms of number of basis points? I mean, can you bring it down to 95% odd?
So on a steady state basis, and I'll refer to Bupa in their UK, Spain and Australia operations, they run combined ratios between 92 and 94%. And if you look at some of our peers in the standalone space, they've also achieved combined ratios in the 95% range. So on a steady state basis, if I look at the comparable of Bupa, which is our majority shareholder, as well as our peers, that's a reasonable expectation to have from a standalone health insurance company.
And that would be in the run up till FY26, by when your expense of management will come down to the limit, is it? Or it could be before that as well?
So Sajid, expense of management I can confirm because it's a regulatory compliance topic. With respect
because
to the
if that comes down, this ratio will also come down, right?
It will come down, but as to when it will get down to 95, it's not something that I can comment on at this stage.
Another thing, Mr. Ramachandran, is your exposure to tier 1. You are heavily into tier 1, and that's one of the reasons why your average ticket size is also much higher compared to your industry peers. Is there a plan to go to tier 2 in other cities?
So, Sajid, we were more heavily into tier 1, but if you looked at the mix of our business today, and this is something again that is in the RHP, we're much more diversified in terms of our geographic spread of the business, and indeed a lot of the expansion that we've been doing in the last 4 years has been to diversify our spread. So today, we are truly a pan-India operator. Through our bank partners, I think we are present pretty much in every pin code of the country. As you know, many of our banks have strong presence in tier 2, tier 3 cities and below. So we have the ability to distribute in every pin code. Our business is much more geographically diversified today. And ticket size frankly, is not to do with the tier, but more in terms of our approach to risk selection. And the whole objective there is to make sure that customers have the right sum insured. And we have seen that in tier 2, tier 3 cities as well. There is the ability to buy adequate sum insureds. And if you looked at our portfolio, 70% of our portfolio comprises of sum insureds of 10 lakh or above. And this is well diversified, not just in tier 1 cities, but also across the remainder of the tiers of where we are present.
How do you see competition from the government schemes? Because it's not just the state, but the central government also has health insurance policy. Now they have extended to senior citizens as well. Will that bring in stiff competition for you?
No, I believe the schemes from the government target different segments of the population. In some ways, they build awareness of health insurance, which helps private sector operators such as ourselves. It's also an opportunity for us to offer complementary top-up supplementary products. For example, Bupa does that very well in the UK, where they offer complementary products to NHS, which is a social insurance scheme. So I think there's definitely higher awareness, ability to offer complementary products. And I think most importantly, the opportunity in health insurance that we see, which is still very much addressable for private sector players such as us, is still 350 million Indians who are yet to purchase private health insurance.
Coming to your channels of sales, direct sales account for nearly 13.6%. Now your employees and sales force account for 13.4. So online sales has been very muted in that sense, 0.2%. And you have told us that you are now depending on higher technology and better algorithms, so that you can not only look at the kind of cases that you pick in, but also expand your expansion there. When do you see online sales picking up for you?
So the proportion of direct sales for us is one of the largest, and this is publicly available data, Sajid. You can look at it, of any operator in the country. So in that sense, we're doing very well in our direct-to-consumer business. And this business has been growing at a very healthy clip. So especially as far as direct-to-consumer and digital business is concerned, I do believe we are very well positioned as Niva Bupa. Our strong brand and product suite, definitely is quite helpful for us to build a leading position in the market.
But your sales through portals is much lower, right? I mean, compared to other players in the industry.
No, if you look at in terms of the data, there is direct, broking, NBFC, banking, and agency, right? These are the distribution channels.
Yeah,
So
within the direct sales, it's only 0.2%, which comes through portal.
Okay, yeah, maybe I can explain that 13% which you are referring to direct sale, majority of this is coming through portal, our own website. That 0.2% you are referring to is basically something which is coming and immediately buying the policy. If somebody is leaving the lead on our website and our telecaller is calling, so that comes under direct. So it is also through website only. Just the difference is the lead is being closed by person over call. So that's the only difference.
Just to get an understanding, Mr. Chamansundan, your 800 crores which you're going to use is not only going to augment your solvency, but how are you planning to use that money in terms of expansion of not only products but also to multi-cities? Is there a breakup that you have?
So that is something that we determine every year basis, our past execution in consultation with our board. That's part of our annual operating plan process. But broadly, what we intend to use the money is to continue to expand our distribution. And as you know, Sajid, we have a strong, diversified multi-channel distribution approach using a number of growth engines. So that's number one. Number two is to continue to invest in a set of capabilities, and by capabilities I mean brand, I mean technology and process and talent, right? Because this is a very execution intensive, and therefore talent is very important. So certainly we want to invest in capabilities so that we're building an organization and institution, that is built to last. So that's broadly how we intend to use the money. The specifics of how we will use it is something that we determine every year in consultation with our board through the annual operating plan process.
Gentlemen, it was a pleasure talking to you today. Your IPO is opening on November 7th, closes on 11th. 70 to 74 is the price band, and you're raising 2,200 crores, which includes 800 crores of fresh issue. As I said, the company is valued at over 13,500 crores at the upper end of the price band. Thank you for watching IPO Adda.
Thank you.